Welcome to the Associate Alcohol and Breweries Limited Q1FY24 earnings conference call hosted by Valorum Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Purvangi Jain from Valorum Advisors. Thank you, and over to you, ma'am.
Good afternoon, everyone, and a warm welcome to you all. My name is Purvangi Jain from Valorum Advisors. We represent the investor relations of Associated Alcohols and Breweries Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings conference call for the first quarter of the financial year 2024. Before we begin, I would like to mention a short cautionary statement. Some of the statements made in today's con call may be forward-looking in nature. Such forward-looking statements are subject to risk and uncertainties, which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to the management. Audiences are cautioned not to rely on these forward-looking statements in making any investment decisions. The purpose of today's earnings conference call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now, I would like to introduce you to the management participating in today's earnings conference call and give it over to them for their opening remarks. We have with us Mr. Tushar Bhandari, Whole-Time Director, and Mr. Ankit Agarwal, Chief Financial Officer. Without any further delay, I now hand over to Mr. Tushar Bhandari for his opening remarks.
Thank you, Purvangi. Good afternoon, everyone, and welcome to our earnings conference call for the first quarter of financial year 24. Let me first brief you on the operational highlights for the quarter under review, after which our CFO, Mr. Ankit Agarwal, will take you through the financials. Let me start with the macroeconomic scenario. In the context of volatile global economic landscape, the liquor segment in India has shown a consistent stability, with consumption pattern resilient during April to June quarter. India's economy remains a bright spot amid global uncertainties, and the liquor industry's strong performance can be attributed to cultural change and consistent demand. The recent RBI policy measures have further fostered economic stability, positive influence consumer spending, including discretionary expenditure on alcohol beverages. With the penetration of the liquor market still relevantly low, the outlook for the sector short to medium-term growth remains promising. Driven by the robust growth trajectory in Indian IMFL segment, the company witnessed a noteworthy year-on-year increase in the sale volume of the IMFL category. The company's overall revenue declined on year-on-year basis, primarily due to reduction in IMFL volume stemming from a shift in government policy. The decline was partially offset by the strong growth in our IMFL licensed brand sale, which also aided in the improving margins. Our primary focus to enter new geographies, launch new brands in premium category, and continue to scale up distribution and visibility in the launch market. We have premium products in pipeline and expected to launch craft gin in a month or two. The company is continuously working on increase its share in IMFL portfolio, and we are happy to share that the revenue share of the company from this segment stood at 44% in the current quarter, and we are continuously striving to increase further in the future. We continue to face inflationary pressures on critical inputs like grain and glass. Encouragingly, glass price indicates slight early signs of decline. However, the grain price are expected to remain at elevated levels. On the capex front, the much-awaited ethanol facility is currently in the trial stage, and we are expected to commence operation from October 23. The expansion in the bottling line is in full swing. We are expecting to commence the operation in the new bottling line in this fiscal year. Due to inordinate delay in the process and looking at the sentiment of all the stakeholders, the board has decided to withdraw the scheme of arrangement for the amalgamation of our company with Mount Everest Breweries Limited. However, I want to emphasize that this move does not affect our strategic direction to growth perspectives. The choice to withdraw from the merger emphasizes our confidence in our company's inherent strength and capacity to achieve a desired outcome. We are now poised to leverage our existing strength for continued growth. Our strategic focus on launching premium products and expanding into the market supports our vision of sustained revenue growth without amalgamation. We decided to seize opportunities that bolster our market position and foster lasting success while staying true to our core strategy objectives. I would now like to hand over the call to our CFO. Thank you, and over to you, Ankit.
Thank you, Tusharji. Hello, everyone, and thank you for joining us on the earnings call today. I'll start by providing an overview of the company's financial performance for first quarter FY24, after which we will move on to the question and answer session. In Q1 FY24, the revenue stood at 156 crores, a decline of 15% on YOY basis. This is due to change in the MP government policy around IML segment. We reported an EBITDA of 18.5 crores with an EBITDA margin of 11.83%, an expansion of 400 basis points in comparison to Q4 FY23. Our profit after tax for the quarter stood at 12.3 crores with a PAT margin of 10.8%. For those seeking more comprehensive insight into our company's performance, we have uploaded the earnings presentation on both the exchange's website and our company's official website. Thank you for your attention. With that, now we can open the floor for question and answer. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. First question is from the line of Harsha from Dimensional Securities. Please go ahead.
Hi, good afternoon, sir. First question is on the IML segment. So what exactly were the changes by the government policies that led to such a sharp decline in the volume for the segment?
Good afternoon, Harsh. So, in this year in the tender, the government had limited the quantity a particular individual can take. So, in that limited quantity, whatever the highest volume was there, so we have been able to take that kind of market share because it's a tendering process. And apart from that, on a positive note side, we were able to take around a 20 to 25% increase in the price in IML. So that has helped us in increase our margins also.
Going ahead, this will be the quarterly run rate that we can work with for this segment?
Yes.
Okay. So is there a cap that the government has put in terms of how much volume you can sell? For every player?
Right. So in a tendering process, the government puts a cap on how much a person can supply an individual, because government wants to secure its revenue also. Because if there is no cap and if one individual or one distiller takes the entire Madhya Pradesh state for supply, and if he is not able to supply, then the government's revenues get affected, which has happened in the past also.
Okay. And next question is for the IMFL segment. So while the license segment has seen a pretty good growth of 15 to 16% volume, the proprietary has been flattish even YOY and QOQ. Given that we would have been launching new products and entering new market, the growth should have been much higher for our proprietary division. So just wanted to understand what is the reason behind this flattish kind of a performance?
See, this slight sign of performance is that the industry is slightly down, especially in Madhya Pradesh. So as per the industry, we have been able to increase our market share, but as a volume-wise, due to industry being down, it's reflecting a slightly less sale. But in terms of the Kerala market, which we have created as one of the largest market, similar on the lines of Madhya Pradesh, the volume has increases, and we are expanding to new geographies, which is under pipeline. So very soon we'll be entering a few other states like Goa, Pondicherry, Odisha, and Assam.
Okay. So besides Kerala, is it that you are facing some challenges in terms of ramping up your volume, or you're finding it difficult to, get the kind of footing that you must have anticipated a year ago?
So see, in this I would not deny. Definitely, it's a difficult scenario to enter into some other new markets and create a market share and to create a space from someone else's. But we have proven ourselves in few states, so we are trying to replicate in other states also. Like Kerala, we are last year we were the fastest company to complete 1 million cases. So we did last year 1.2 million cases, and this year we are expecting the sales to be higher. So we have proven ourselves in one market, and in Kerala we are the fourth largest player in the market right now, and we are trying to replicate in certain other markets also. But the process is long in other markets of entering and label registration and all that process. So once it's done in other states, you will try and capture and encash. So every state has got its unique feature. So you have to launch unique products. You have to have a different strategy. Plus, apart from that, the company is also moving right now more because looking into the consumption pattern of more younger generation and more people having a disposable income, and people are looking for aspirational brands. So we have seen the market has completely moved towards premiumization. So company has aligned its portfolio in next 1 to 2 quarters to launch a premium 2-3 premium brands. So those are under pipeline, because now the advantage to companies like us is that if you do quality product, you can capture the market share, because now consumers are open to choices. See, earlier what used to happen 5 years back, if I talk that if you ask someone what do you drink, he will tell a specific brand, say I drink X brand and all. But now if you ask what do you drink, he will specify a category. Say for example a gin, a whiskey, a rum. So a person like us who is able to give a value for money and is able to give good products, there's a great opportunity for players like us. So we are trying to encash on that, and we have aligned our pipeline accordingly, and every quarter we plan to launch one new product this year in the premium category, which will help the company to improve the margins.
Understood. And last question on calling off the merger between the Mount Everest and Associated. So was it because of any regulatory hurdle that you wouldn't manage to cross, or was it purely because you thought that the synergistic benefit which we might have anticipated might not come through? So just wanted to understand the thought process behind that.
There was no regulatory hurdle which we were not able to. There is no question of managing or not managing. It's a process. And every opportunity has a time attached to it. Okay. So as you rightly said towards the end lag of your question, that was it taking you too much time, or was it was a delay? So as I said that due to inaudited delay in the process, we looked into calling off the merger. But the company which was already focused earlier also in growth of its own brands, in growth of its margin, in growth of its turnover, the company's focus in that was earlier also, now also, and will be there in future also. So our focus would not change. And now our more focus is towards the premiumization of the product and to launch new premium products.
Okay. Thank you so much, sir. Thank you.
Thank you.
Thank you. Next question is from the line of Danesh Mistry from Investor First Advisor. Please go ahead.
Hello. Good afternoon, sir, and thank you for taking my question. I'm just continuing the discussion of the previous caller. So 2 points. One is that, sir, if you can help us understand, what is the situation on the RM side. That's question number one. Then I'll come to question number two, sir. And how are we trying to address it? You mentioned grain prices, etc. But just to understand, how are we trying to address this issue now?
See, pressure in terms of grain and the glass, those are the major raw materials which are facing the pressure. And glass, we are seeing a little, downwards trend. And as far as the grain is concerned, our plant is fungible to, we can use any sort of grain, whether it is rice, maize, or sorghum. So we look into the profitability and the costing point, and accordingly we decide which grains to be used. And accordingly we take the call. So that in that way we'll be able to support our costs and sustain our margins.
Got it. Understood.
What we're trying to do is that we are trying to effectively source the grain. See, something which is not in our control, we can try and manage and mitigate the amount of impact which should be there on the balance sheet. So what we are trying to do is that we have gone a step further. We started to buy directly from the manufacturer. So, for example, rice flakes we buy. So we directly go, instead of buying from the broker, we directly started buying from the mandis, directly buying from the companies. Okay, so that has helped the broker margin and reduce our cost. And the biggest advantage to company is that we are debt-free company. So we try, unlike other players in the market who have long payment terms, we try to buy on a short payment term and try to take a higher discount on that. And plus, apart from that, the government is also in a way supporting. What government has done is government has introduced ban of rice now. So that has increased the availability of rice in India. Second, the Madhya Pradesh government has recently organized a meeting between Agriculture Department and the industries like us to encourage the production of maize. So if the production of maize increases, and so that will help in availability of maize. So these are few things which are happening on this front, and we are trying to mitigate these things. And we are also trying to procure grains at the right time and the right price, because and we have enough silos to store that. So we are trying to do that also. So these are the few small steps which are taking towards the mitigation of the price increase.
I think, one more point I'll just add to it. So our plant is centrally located, and we can take grain from either Chhattisgarh or Maharashtra or within MP. So the logistic cost or the transportation cost remains same across for all three states. Availability is not an issue for us.
Understood, sir. Understood. And sir, just one more question. This is a bit of strategic in nature, but now that we have called off this merger, which is there, do you think that, and given the valuations of where our company is, do you think there is scope for the promoters, etc., to increase their stake in the company? Because our growth profile is pretty good and valuations also are reasonable. So just checking on that behalf, sir.
So see, as far as the increasing the stake in the company for the promoter is concerned, that is not on the card as of now, but we can think it of in the future. Right now, we are focused on increasing our strength, like expansion to meet the market requirement. Like ethanol is coming up, bottling line is going on. We have other few projects in the pipeline to increase the facility expansion. So those are the things which we are concentrating on to increase the business assets. And as far as the promoter stake increase is concerned, that is not on card as of now, but we can very well look into the future at the right time and the right valuation.
See, right now the entire management, as I said earlier, also is focused in the growth and increase the margin and launching new products. So the entire team forces and strength is on that basis. How to launch new products, how to launch new brands, and which markets to enter. And we are completely focused towards that at present.
Understood. Thank you very much, sir, and wish you the very best of luck, sir. Thank you, sir.
Pleasure.
Thank you. Before we move to the next question, a reminder to the participant, anyone who wishes to ask a question may press star and one. Next question is from the line of Manoj Pura from Adinath Financial Service Private Limited. Please go ahead.
Hello. Good afternoon to all. Myself, Manoj Pura from Adinath Financial Services Private Limited. My question is regarding ethanol project. When the ethanol project is going to start commercial production, sir?
Good afternoon, Bolaji. Bolaji, as I said, the ethanol project is expected to, all the trials are up in process, like boiler trial, plant trial, all the trials are in process. And ethanol project should be up and running from 1st of October.
Because in the annual report you have written that it will start in the month of August.
So August trials have already started. So trials and especially commissioning a new plant and such a big plant, okay, all the trials are there, everything is there. So that is in process. So in August and in October we can start.
Right. My next question is, recently I have heard that FCI has stopped supplying rice to ethanol manufacturing plants. Then what is our strategy in the light of that?
Sir, in the line of that, as I said earlier, that we are into multiple grain field plants. So ethanol. We had also tied up with FCI for the rice. But now if the government has stopped FCI rice, and now government is again reconsidering to supply FCI rice to ethanol manufacturers. And government, and in recent statement, government has also started procuring. But what we are doing is that we are also looking at procurement of other crops. So right now we are looking at procurement of corn, which is easily available and at a lesser price and has a better economic value in terms of conversion. That we are doing. Plus also government has recently announced that if an ethanol manufacturer, if manufacturing from grain, would get an interim relief of 6 rupees hike in the price of ethanol.
Right. My next question is, Bhandari ji, what will be our top line for this year from ethanol business and what will be our bottom line from ethanol business? What you are projecting?
So, Boraji, as far as you know, we cannot comment on the forward-looking statement on this call. So, once this gets started, the numbers will start coming in the results, and we will be able to look into that. But
does the change in government policy in any way impact our profitability?
No. So what we are targeting is 130 KLPD is our planned capacity. So we will be able to sell whatever we produce, since there is a gap in the supply and the demand. And as far as the profitability is concerned, it is in the line what the other industry players are having in the EBITDA and the PAT terms. We will get those things, and there should not be an issue with that.
Do we have plans to divert ethanol to ENA in the near future?
We are targeting on ethanol facility only, and we will be doing ethanol as such, and we don't have any plan to switch it to the ENA.
So thank you, Agarwal ji. Thank you.
Thank you.
That's all from my side.
Thank you.
Thank you. Next question is from the line of Yash Modi from Ashika Group. Please go ahead.
Hey, good afternoon to the team. And first of all, congratulations for calling off the merger. I think it had taken a lot of our time. And like you said, just wanted to understand from a strategic viewpoint, now that you have two separate companies, so it doesn't alter your initial plan of what you had written in the annual report, right, of chasing more shops, entering more states. Just as two separate companies, you'll be doing that, but operationally it will be the same thing, right? Is that the correct understanding?
Good afternoon, Yash. Yes, as you rightly said, that company, and I said earlier also, the company is already looking at growth, and we are aggressive looking at entering new markets and entering new products and chasing growth. So that has always been the focus, and so we are looking into that.
All right. Sir, and now B2B revenue is 56%. You have scaled up B2C revenues for this part of the business also, like IMIL also to 44%. So where do we see in the next 2 years, where do you intend after the premium gin that you're launching, where do you see B2C part of the business stabilizing around? Would it be like the reverse, say 60-40 in the next 2-3 years? Is it a fair assumption?
Actually, as we said earlier also, and we stick to our commitments. If you have heard us 2 years back also, in 2 years back also we had said that aggressively we are looking at increasing the sale of value-added products, and that we have proven ourselves in last 2 years, and we are also looking at aggressively increasing the value-added products in our portfolio, and definitely we would be looking at increasing the sale of our value-added products and IMFL products, and we are concentrating on that. So the contribution towards the sale of our own IMFL products would increase substantially in the years to come.
Got it, sir. So, sir, historically, if we look at it, we've always been in the 16 to 18% margin. FY21 was an aberration wherein we did 20-21% margin. So right now we are at 9% odd. This quarter we've seen good recovery in the margin. So when do we now that the brand portfolio of our business is going up, when do you think it is a fair assumption to say we'll go back to our normalized run rate of margins somewhere around FY25, even if say cost pressures subside somewhat, not much, because obviously the brand portion will give you the extra margins? Is it a fair assumption again?
So see, there are two parts attached to it, So as far as the old days of margin, 16-18% of beta you're talking about. So if you look at the prices at that time and the prices at that time, if you consider that, we will be standing at the same position. If you change that increase in the price, if you give the impact of the increase in the price in the EBITDA front. So current EBITDA, what we have reported of 11.83 in this quarter, will be in the similar lines. But since we cannot control the commodity price, what we can do is in the increasing our operational efficiency and the increase in the sales and realization. To that we are working on, and with the increase in the premium segment products, we are confident that we will be able to reach that level in next 2 to 3 years.
Sure.
And whatever is the gain which we get from the softening of the commodity price, that will flow in the EBITDA obviously.
Sure. One interesting thing that I saw from your annual report, sir, even when you were forming this plant, you've always kept it fungible to various grains. Now, adding on to the previous participant's question, when you said about the ethanol and the ENA capacity, I see in the annual report you have mentioned that the ethanol capacity that you've put up is also fungible in nature, in the sense that if for some reason government policy changes, that ethanol plant is capable of producing ENA as well. So could you just lend some light to this capex of yours?
So yes, the plant is capable of manufacturing both ethanol and ENA, but right now the company is purely concentrating on manufacturing ethanol in that. So in the coming years, we are concentrating on ethanol, because right now the ethanol is a big opportunity for the country. Right now the blend of ethanol is only 10%. The government has strictly put a mandate by 2025. Compulsorily, everybody has to blend 20%. Okay, so there is still a huge gap and opportunity in that. Plus, apart from that, we are located centrally in Madhya Pradesh. In Madhya Pradesh, the government is able to achieve 10%, but out of that 10% ethanol which government is able to achieve, still 4 to 5% is coming from other states. So Madhya Pradesh is still ethanol deficit, and there is a great opportunity in the years to come. So we are focused on sale of ethanol only right now.
Got it. All right, congratulations for a good set of numbers and turning around the corners. Hope to see much better numbers going forward. One of the few companies with a debt-free balance sheet, like you said. All the best.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1. The next question is from the line of Aditya Surana from Nivesha Investment Advisors. Please go ahead.
Good afternoon, sir. What are the current prices of gluconite? Do you think it will be coming back to the normal in the coming years? Which feedstock the company used in the boiler to generate steam? And what is the prices of DDGS? Do you see it falling?
So your question was not clear. If you can just repeat it, we cannot hear you properly.
Is my voice audible?
It's audible, but it's little blur. So if you can just use your handset or you can just speak a little
now?
Yeah, please.
What are the current market price of gluconite? Do you think it would be coming back in the normal year, coming back to the normal price in the coming years? Which feedstock the company uses in the boiler to generate steam? And what is the pricing of DDGS? Do you see it falling?
Yeah. So as far as the rice price is concerned, current rice is around 23 rate, and we expect it to come down. Since we are expecting a normal rice crop this year around the country, so it should definitely come down. But we cannot know the timeline whether it will happen in 6 months or 1 year time. But it should definitely come down. As far as the prices of the DDGS is concerned, it's in the range what the company used to get, and so there is a little reduction because there is an increase in the supply and since a lot of ethanol plants are coming up. So there's an increase in the decrease in the price as compared to the previous year.
Thank you. This was all from my side.
Thank you.
Thank you. A reminder to the participant, anyone who wishes to ask a question may press star and 1. Next question is from the line of Priyansh, an individual investor. Please go ahead.
Yeah, hello. My first question is regarding this ethanol project. Since it's going to start from 1st of October, so how many months do you think to ramp up the full capacity, and what is this capacity, please?
So, good afternoon, Priyanshi. So, to ramp up the production is that, as I said earlier, that in Madhya Pradesh there is still a huge shortage in ethanol supply. So, supply of ethanol is not an issue. So, on the very first initial days, we will be able to supply and utilize the plant to the 100% capacity. And our plant is at 1,35,000 liters per day capacity.
Okay, and did we already sign this sale purchase agreement within OMC?
We've already applied and we have already registered ourselves for the sale purchase agreement with the BPCL and IOCL. And as soon as the plant starts manufacturing ethanol, we will get a purchase order from them.
Okay. And my second question is regarding this on the like quantity sides, like for these IMIL cases, our it is significantly down, 45% down. So what steps are you taking to recover this one? And since you already mentioned that you are you will be launching new states like Goa, Odisha, and all those things. So there are two steps here. Like from 1,767,000 to it has come down to 959. So when you will be able to recoup it, and then by launching new state, how much will be growth here for IMI cases?
So see, Priyansh, in terms of IMIL, we as a company, we are very clear. IMIL is basically a state subject. We cannot move into other states because it's the low value product. And as a state subject, we are primarily into Madhya Pradesh, and we hold the maximum market share in Madhya Pradesh. It's a tendering process, and as I said earlier, also due to certain policy change in the government, the volumes have gone down. But however, with the down volume, we were able to take a substantial price increase in IMIL product. But the company over the years have been focused in increase the sale of its IMFL products. So that we are aggressively looking into it, and we are aggressively planning to launch at least 3-4 states every year and increasing the volumes there. And we are able to, and we are focusing on making states like Madhya Pradesh, where we hold the maximum market share in IMFL particularly, to make 1 or 2, 3 states more in the coming years to come. Kerala we have already created, so the volumes in Kerala is almost equivalent to the volumes what we are doing in Madhya Pradesh, and we expect to increase the volume substantially there. So similar 2-3 states more we are planning to concentrate and make such a big volume states in the 1 or 2 years to come. So that will help us increase in our own IMFL products, and plus that will help us to consume the manufacturing of ENA at our in-house products.
No, but like this, I just would like to a little bit delve here, because see, this when the IML has gone down by 45% on Y&Y, so it means this business standalone is now almost at the break-even level, or maybe incurring losses, I think, because 45% down is substantial. Number one. Number two, so first of all, I think you mentioned change in the government policy, but I think it is for the lower segment of the masses. So I think those people still consume. So I don't understand what has been the particular change of the policy of the government, or whether they increase excise duty or whatever. So why it has gone down to to this extent, and whether the other competitor in MP has also faced the same this down in this the sales of IMIL?
So Priyansh, as I clearly said earlier, that in this what the government has done is the government has limited a supply a particular company can do, and it is a tendering process. Okay, which happens every year. So government has reduced the volume of the supply which a particular company can do. So over the years, we were the largest supplier in state of Madhya Pradesh. Till today also we are the largest supplier in the state of Madhya Pradesh. In terms of when I talk only in we are talking about IMIL. Okay, so whatever the government's maximum cap is there, we are supplying to that much quantity.
So whether this allocation or tender, is it a discretionary affairs by the government? Because since you are one of the largest and masses still consume, so whether the government want to sort of reduce this monopolistic or in big supply, they want to distribute this quota to many companies, or whether there has been any other particular reason. Did you guys factor in that what led the government to reduce our quota by 50%?
So basically what happened is that last year when the government had a higher cap, in that also we had the maximum volume with us, whatever the maximum cap of government were there. But in this what happens in IMIL process is that you get a supply of a particular district. So for example, Madhya Pradesh has 52 districts and I get a supply of, for example, Indore district. So only I will be able to supply in Indore district, nobody else will be able to supply in the Indore district. So that's what happened. So last year one or two players had taken the more quantity which they could supply. So in that what happened, so for example, an ex-person took an Indore district and he was not able to supply. So the government revenue suffered drastically.
So sir, are you taking any more action with the government level, whatever, to approach PR and to convince them that so that next tendering, whenever it happens, you don't get only one Indore district, you get 3-4 districts, for example. Just a thought.
See, that's the volume restriction which government has put, and we take regular steps and do the regular representation to the government. But still, I'll again reiterate, it's IMIL we are talking about. IMIL is a low margin product. The company is purely focused on increasing its IMFL sale. Okay. The company would be a leading player in IMIL. Whatever the government policies remains, it has been a leading player since last 20 to 25 years. It will still be a leading player in IMIL. But our focus is completely on IMFL, premiumization brand, by getting more margins in sale of premiumization brands. We have a premium gin in pipeline. We are making a blended scotch. We are in the process of making a blended scotch. We are in the process of making an RTD. So these products are there in pipeline, and company is purely focusing on premiumization and selling its quality, because the company has got its quality product to a tune. The basis ENA which is there, I have told earlier also, we are also exporting ENA to European markets to make Smirnoff there. So that speaks the quality which we produce. And we believe in quality, and we believe in providing quality at a reasonable price to customers. That's where our concentration is purely on.
No, very good, very good. So, sir, my last statement will be, taking together IMIL and IMFL, how much capacity currently we are producing, and what is the scope of producing more number of cases? For example, this number one. Number two, in this quarter gone, how many states did we launch the IMFL, but because still you see the volume is static?
Yeah. So what happens is that the licensing process takes time. Every state, so in India, dealing in the liquor business, every state is a different country altogether. So you have to get license done, you have to get label approval done, you have to get premises approval done, you have to get a lot of approvals. So that is in process of 2 to 3 other states. So there we are doing it, and as I said, this year we are planning to launch 3 states, they primarily being Goa, Pondicherry, Punjab and Odisha.
By which month, sir?
And West Bengal.
Sorry? By which month, for example, Punjab, Pondicherry, which month?
I cannot say this month, but definitely in this financial year, these states would be launched, and very soon 1 or 2 states would be launched.
Okay. So in the last quarter, did we launch any new state in the June quarter?
Yeah, in the last quarter we were present. We've not launched any new states because the April is the licensing process. Okay, the April licensing process starts. So all the existing license first are different preference to renew that, and further the new licenses which comes, they start in action. So those now will start happening this quarter, coming quarter.
Thank you, sir. Thank you.
Thank you.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1. We have our next follow-up question from the line of Yash Modi from Ashika Group. Please go ahead.
Yeah, thank you for the opportunity again, sir. Just wanted to know more about our partnership with Diageo United Spirits. So I think the licensed brands have done pretty well. So if you could elaborate, how are things going on? Are we looking at entering more states with them as well, apart from MP?
So basically, yes, our relationship with Diageo has been increasing and is becoming stronger day by day. In terms of supplying ENA to them, so as I said that we are supplying ENA to them in the European markets, also to make Smirnoff in European markets. Our strength is increasing in terms of manufacturing, job work manufacturing also. We are setting up a new bottling hall completely for Diageo, which will increase our job work manufacturing. In terms of your specific question, in terms of entering other states with Diageo's products, we are not pretty sure right now. We are pretty sure in entering other states with our own products where we have more confidence on. So we'll be entering other states, our own products, and we'll be trying to take market share of that. And plus, apart from that, there are a few other things also which are there in pipeline with Diageo. And as soon as those things materialize, that will make our relationship stronger with them.
Are you by any chance referring to any export-led opportunities with Diageo sourcing like globally? Is that what you're referring to? Because apart from this, I don't know what else can be the thing.
So there are other opportunities which are there, which I think within short period of time, once it's materialized, we'll disclose it. But exporting is purely in terms of ENA. We are definitely looking at exporting our own products, which we have tie-up with one or two players, and that has also increased substantially. And in the years to come, we are planning to increase our overseas exports also to various countries.
Sure. Thank you so much, sir. All the best.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Priyansh, an individual investor. Please go ahead.
Just as a follow-up, since you mentioned that you will be launching Punjab, which is very much high liquor consumption state. So how this logistic will work out? Means whether won't it be costlier to transport the liquor from MP to Punjab, and then this number one. Number two, in Pondicherry, which is the low excise zone, again the same thing. How will you compete with the local players over there?
So, Yash, as we said earlier, that the company makes a strategic decision to enter any other state. So, as we entered Kerala, so in Kerala, we are not sending it from here. We are getting it manufactured there itself. So, we are right now a tie-up with 2 units there. Initially, we entered with 1 unit. So, the advantage in that case is that the company does not have any capital expenditure in setting up of a new bottling plant or something. The company has only expenditures in terms of working capital, and major portion of working capital is ENA. So that we supply from our own unit. So similar things we are doing in Punjab. So we have tied up with the bottling manufacturer there. So in that premises, we will manufacture our own products and we will be entering in that market. Definitely, it's difficult to enter any new market and gain market share. But Punjab, the consumption is increasing and the consumption of quality products is also increasing substantially there. So the company is planning to launch its quality product there and start manufacturing there. And we are trying to do unique things in whichever market we enter. we try to do one or two unique things, which is not the market practices, which nobody has done. Like for example, in Kerala we launched white brandy. We were the first one in the country to launch a white brandy. The Kerala is a brandy drinking market that clicked really well, and that gave us a USP. So in Punjab also, one or two unique features we are trying to capture in our products that will help us give us a unique advantage. So once with that unique advantage, our product is entered and the people, consumers have confidence in the product of a particular company, the other products follows. So that also we are doing. So this is a strategy which we are following in entering Punjab.
No, fantastic. Just like, sir, it reminds me like very similar story like yours of a very local brand, local Indian company, Radico Khaitan. Now, see, this is how they have promoted, how they have grabbed the market share for their own proprietary brand, and see now how it's performing excellently. So, what strategy, our associate is going to adapt from them, or understand from them, from their business model, like whatever is available on the public domain, that we can also just create value for our own brands to be in that league. Because see, not as an investor, but as a general public, now our share price is hardly 450, around that. It must have been in the range of 800 to 2,000, considering we have the franchisee, we have the IML, we have the own brand. So I'm talking more of strategic now, that how to create some niche brand for any particular, be it brandy, be it, for example, vodka, be it whiskey, and then be in that league.
So, consumption is moving towards premiumization. Okay, as I said, consumers are ready and open to pick up a new brand and taste it. Okay, so that gives an opportunity of player like us who produce quality products. So that's where we are trying to capture. So we are trying to give to the customers, and as you said, that it's difficult to enter any new market. So one is that we are adding few unique features in our products. Second is that we are trying to give value for money to the customers. So for example, a product is there and of the similar quality, the consumer is able to get at a lesser price. So that's where we are trying to capture the market share and enter the market. So we are also concentrating on creating new and premium products, which you will see definitely in a year's time to come. You will see a couple of good quality premium products coming in our portfolio, and we will try to gain the market share on those basis.
And so, just let me put some more strategy here. Since we are also the franchisee of leading brands, so whether that is not eating my own premiumization of my own brand, because see, suppose if I'm selling one brand of this franchisee product, so the consumer is buying that, and then maybe by producing franchisee, maybe I'm getting 10% markup. But if instead of that, suppose for example, that capacity, if I substitute not full, to some extent, if I shift to my own premium brand, then maybe my market will be 40-50%. The thing happening in our other company in India, for example. So what the point I'm trying to say, did we conceive or nurture any premium brand already, or are we going to launch a premium brand? Whether registration and everything has happened, number one, and number two, in terms of placing in the market, how are we going to play it around? Because see, since I'm selling this premium also, since I'm selling franchisee also, I'm this my dealer distributor is not buying the other one. So it should not cross cut or it should not eat into my share of my own premium brand. This is a very strategic thing, because premium brand can only take our company to the next league. Otherwise, we will be only commodity player. So we have to niche out from the commodity to the premium brand, sir. If you can spell out something more, this will be really helpful, sir.
So, Priyansh, in this, I will just say a few things, is that we are concentrating on premium brands and increasing the sale of our products in other states. In terms of what you said, we are doing only franchisee of Diageo in the states of Madhya Pradesh, and we have very well placed the price of our products and Diageo's franchise products in a price range that every 5 rupees in a particular category, up or down, either ours or Diageo's product is available. So we are not allowing the customer to move anywhere apart from the domain of associated. be it franchisee or be it our own products. That's the strategy which we are following in Madhya Pradesh. So that is helping us to create the volume of ours and of the franchisee brand. So you could see the volume of both the brands increasing. And secondly, in other states, wherever we are entering with only our brands. So that is purely a premiumization product category which we are doing.
And this this advertisement campaign, are we conceiving like below the line, above the line? For any this marketing activity, advertisement activity, ATL or BTL below the line or above the line for our premium brands? Are we conceiving or are we doing any, or are we planning to do any ad campaign for this one?
Yeah. We are not planning to ad campaign, but we are trying to do value for money branding, because in the liquor category, value for money branding is very important. So it's not necessary that you have to appoint a big star or you have to have a big hoarding or you have to have a big picture. The incentive which is to be given is to given to the retail salesmen. 50% of the regular customers who are there, 70% of the regular customers who are there have got a particular wine shop, have got a particular salesman whom they purchase the liquor from. So we try to influence those people, salesmen, and we try to take a complete bottoms-up approach. So that helps the customer to taste our product, and if the product of quality is good, the conversion happens that. Plus, to support that, on the premiumization, we are doing social media activities and other activations which you will see in the years to come.
Beautiful, sir. Beautiful. All the best. Thank you.
Thank you.
Thank you. Ladies and gentlemen, this was the last question for the day. I would now like to hand over the conference to the management for the
Yes. I extend my gratitude to each of you for your active participation in this earnings conference call. Our objective was to provide you with a comprehensive response to your inquiries while also granting your valuable insight into our business operation. Should you have any remaining questions or a desire to develop deeper into our company interactive, I encourage you to reach out to our dedicated investor relationship manager at Velorum Advisory. Your safety and well-being are of utmost importance to us, and we sincerely thank you for your time. Stay secure and in good health. Thank you very much.
Thank you. Thanks for participation. Thank you.
Thank you very much. On behalf of Associate Alcohol and Breweries Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.